Ladies and gentlemen, welcome to the main event.
Let's go.
Round one, fight.
Thank you for tuning in to the Crypto Street Podcast. Here are your hosts, Killer Whale, Prince, and Crypto Dale.
And remember to tip your waitress.
What is up, everybody? Thanks for tuning in to Crypto Street Podcast. We are slowly approaching that 100th episode, so make sure you are paying attention to our Twitter at Crypto Street Pod. We'll have information on there here soon regarding that 100th show. It's really hard, Killer, to kind of plan that a little bit, just because we've had, we jam pack our schedule with the thoughts of people backing out or something shouldn't say backing out, but something coming up. So just pay close attention to that. Tonight we're riding solo, just Killer and I. Prince is doing hockey things in Canada land. So we're going to try and rock this out, but it shouldn't be too hard without him. He doesn't really do much. So what's up, Killer? How's it going?
I'm doing great, bro. It's I got like a little case of the Tuesdays, I guess, today. I'm a little bit mucky on the work week, but I'm thrilled. My Jets showed a phenomenal team on Monday for the first time in maybe 20 years. So I'm very stoked about that. Jets look good. Darnold look good. Crypto markets are boring me to absolute death. It's brutal on the other side of things, but yeah, I'm doing all right.
Before we get into the show, one thing that I think is hilarious, and shout out to Nike, Forex Nike on Twitter. He said that the Browns are off to their best start since 2004, and they tied. Come on. I'm a Bears fan, and that game was brutal on Sunday night, but at least we don't tie and are off to our best start since 2014. So it's wild. But anyways, on to the show. With my background in, my in real life job, this is really something that I've taken a really liking and interest into. So really stoked to have, we're joined with Zac Prince. He is the CEO of BlockFi. So Zac, thanks for taking time out of your busy travel schedule, I know, to join us here tonight.
Yeah, thanks for having me, guys. Happy to be here.
Yeah, no problem. Again, everyone always asks what day we're recording. So this is September 11th. Tuesday night. Zac, why don't you start out with just telling kind of everyone how you got into crypto, a little bit of your background before we dive into BlockFi.
Yeah, sure. So I got into crypto a bit by chance. I was at I can't remember if it was a meetup or some type of social gathering, and someone told me to buy Bitcoin, and this is 2015. And I, potentially foolishly just pulled up my phone and I was like, how do I buy it? And they said, you download the Coinbase app. Downloaded the app and bought a little bit of Bitcoin. I woke up the next day and looked at it a little bit more and said, okay, it was at 1,000 a few months ago, and now it's at like 300. And I bought a bit more than I did in my, quick decision that evening. And then I kind of forgot about it and checked the price on it maybe a month or 6 weeks after I first bought. And it had gone from 300 up to 450. And I was like, oh, you're a really smart guy. And that's a badass trade. Easy money, right? And I sold it. I sold it all. And then, another month or two later, I checked the price again and it was at 700. And I'm like, you're such an idiot. And I basically started going down the, proverbial rabbit hole. But at the time, and this is really relevant for BlockFi, at the time I was working in a fintech company that was kind of in the middle of the online lending ecosystem. So I've always worked at venture-backed tech startups. At the time, I was working at a company called Orchard, and we basically sat between companies like Lending Club and SoFi and Funding Circle and all these big non-bank lenders that emerged after the financial crisis and stepped in to provide credit and debt in sectors of the economy where banks had stopped lending. And then institutional investors who were either buying loans from those platforms or lending to the platforms to fund their balance sheet. So I was kind of in the middle of this online lending ecosystem. And in my spare time, I started going further and further down the crypto rabbit hole over the next couple of years. And then at the beginning of 2017, a couple of things happened that led me to want to start BlockFi. The first was that the crypto market cap crossed $100 billion. And I was like, okay, this is real. This isn't something that's going away. I got really interested in the Ethereum concept, and I originally kind of made an analogy in my own head of, Ethereum's an iPhone and Bitcoin's a BlackBerry. And it made a lot of sense to me, and I'd purchased some Ethereum in 2016. And when the Enterprise Ethereum Alliance got announced, and I saw at some of these meetups in New York City that I had started going to, the makeup of the room changed from being computer scientists and kind of super early adopters of crypto to also including venture capitalists, a few bankers, more and more entrepreneurs. And I just started thinking there's got to be something I can do in this space. And then the light bulb moment for me with BlockFi came from an experience I had with a bank where I was trying to buy an investment property in Texas, where I'm originally from. And I listed Bitcoin and Ether on my financial statement that I submitted to the bank, and the bank freaked out. And they thought that I was involved in some, potentially illicit activity, even though I had a job and W-2 income and all that good stuff. And I realized that for all the same reasons that this online lending ecosystem had been really, really successful, with banks not participating in certain parts of the lending economy, that same stuff was going to be true for crypto. And there's going to be a big need for debt and credit products. And I was really, well positioned with my network of institutional investors to raise capital from, and also experience in fintech to start a company around that idea. And that's what led me to start BlockFi last summer.
So what, very high level before we dive in, what exactly is BlockFi for those that have never heard of it?
So we're building products in the debt and credit part of the financial infrastructure layer for the crypto asset ecosystem. We have one product that is live right now, and you can think of it as kind of like a home equity loan, except instead of home equity, it's crypto equity. So if you own Bitcoin or own Ether and you don't want to sell it, but you want some liquidity to make another investment or pay down debt, or if you're a company to process payroll or fund other expenses that are fiat denominated, again, without selling your crypto or without giving up your exposure to crypto, and especially without triggering a taxable event, you can take the value of that Bitcoin or Ether, collateralize it with BlockFi, and receive a USD loan based on the value of those assets. So that's what we're doing right now. We're lending money to holders of Bitcoin and Ether, and we are the lowest cost option in the market for this type of borrowing. And we're also the only company so far in the sector that's raised institutional capital to support those lending activities.
Yeah. So I know on your website you said that your max loan to value is 35%. That's correct, right?
That's correct.
So what, if everyone listening doesn't know, so basically if you need, for simplicity, $1,000, the most that, or if you have $1,000 in Ethereum or Bitcoin, the most they'd lend is 350. So let's talk about the store of value with that. So say I need, again, for simplicity purposes, say I need $350. So I send you $1,000 in Ethereum, but we go through this crash that we're going through right now. How does what happens, I guess?
Sure. So I think it's important for anyone that isn't familiar with these products to understand the bull side of the equation first. So you have that $1,000 of Ethereum. Right now, we would lend you up to 350 USD initially, backed by that $1,000 of Ethereum. If the price of Ethereum goes up to 2,000, 3,000, 5,000, that's still our client's money. We're not taking any of that upside. They just have a loan for $350 that they need to pay back, which they can do using USD or using the Ether that's now worth $5,000, using a small part of it to pay back the loan, and then we return the Ether back to them. Now to talk about the downside scenario. So if the $1,000 of Ether declines in value by 50% and is now worth $500, we have a margin call. And what happens when we have a margin call is there's a 72-hour period of time where our clients have the option to either add more Ether to the position to improve their loan-to-value ratio, pay down some of the principal that they owe us in USD, or take no action. And if they choose to take no action at the end of that 72-hour window, if the value of the Ether is still at $500 or below, we will initiate a partial collateral sale, where we'll basically take some of that $500 of Ether, sell it to pay down the $350 of USD that we lent them, and rebalance the position. And again, in that scenario, we're never taking more than what is owed to us that we've lent out on the USD side. So they'll still have more Ether with BlockFi than the outstanding debt, which is still theirs. And we're still in the same scenario that we were at initiation, just in smaller amounts.
One thing I when I first went through the process and talked with some guys from your team on when we were reviewing this, I went ahead and filled out like an application like I was going to borrow the money, and it seemed honestly, it seemed pretty painless. So I didn't get all the way through it, but maybe talk a little bit about how, if someone is interested in this, how the whole process works.
Sure. So first off, we have a lot of educational material on the website. You can read about the tax implications of borrowing against your crypto rather than selling it, and all of the details about how our product works on our blog. There's a lot of good articles there. We also have a loan calculator on the website, so you can see some of these numerical details around how much do I need to post to get a certain amount of money, what is the cost, and what are the monthly payments, what is the term, etc. But to go from end to end, if you submit a loan application with us, the loan application takes about a minute, maybe 2 minutes if you forgot your social security number. And during business hours, you can get an approval in under 10 minutes. If you apply on the weekend, it might take us up to 24 hours to respond with an approval. Once you have an approval, you sign your loan docs. We create a unique deposit address for each one of our customers. And once we've received the collateral, we fund via wire transfer. So those take, depending on your bank, anywhere from 15 minutes to a couple hours, but it can only be done on business days. So we've gone from a new customer coming to the website and submitting an application to money in their bank account in as fast as 30 minutes.
Yeah, that's pretty slick. Talk about on that loan calculator. I just pulled it up here and just entered loan amount at 100,000. So it tells you here the collateral needed is 46 and odd change decimals of Bitcoin. It tells you your monthly payment is 1,000. Total interest that you'd pay 12,000. The initial loan duration 12 months, and then the margin call price for what Bitcoin would get to. So let's talk loan duration. Is 12 months the max term that you guys have for now? And if not, or if it is, do you ever foresee in the future going any further out than that?
So 12 months is the max right now. A couple of notes on that. The first is that there's never a prepayment penalty with BlockFi. So you see on that loan calculator what your monthly payment is. If you hold a loan for 31 days and you make one monthly payment and then you decide you want to pay back the loan, there's no penalties associated with doing that. You would just pay us for that 1 month of interest and nothing on top of that. We intend to offer every single customer the ability to refinance the loan. So while the initial term is 1 year, we will have the option for everyone to roll the loan, at whatever our current rates are at the time. And the reason we're doing, maximum 1 year term right now is primarily because we're optimizing for fundraising. So the way lending businesses work, if you're not a bank that has, effectively a zero cost of capital, is we have to raise money, which we're then lending out. We're raising equity and debt capital at BlockFi. And basically, we're able to reduce the cost of that capital if we keep our loan durations shorter. So the rates for anyone that took a loan from us when we started lending in January or takes a loan from us now, when they get to that 1 year initial end of that term, for them to refinance is going to be a lot cheaper. So, the first loan we made, I think, was at a 15 or a 16% APR. That cost has already come down pretty materially. We're in the 10 to 13% range for most loans now. And we'll be, in 2019 at some point below 10% in terms of our overall costs. So we also think that if you're considering taking a loan like this, it's better right now to not lock in a 3, 5, 10-year term.
Sure.
Because this is still such a new sector. Cost of capital is going to come down, and it's going to be a lot cheaper to refinance or initiate a loan at a point in the future. But right now, we do have max initial term of 1 year.
So does everyone have the same rate, or if not, how do you base that rate? I mean, based off of your cost of capital and whatnot. But so, like, does it matter if I apply for a loan and same amount, same crypto, Bitcoin, and then Killer applies for the same loan amount as me, and same Bitcoin as collateral? Is it the same rate for each of us, or
if you apply on the same day, the chances that it will be the same rate if you're applying for the same loan size are pretty close to 100%. There are some scenarios where, because of state regulations, one of you might get a slightly cheaper loan, but for the most part, your rates would be the same. Over time, you will see our pricing start to look similar to borrowing against a portfolio of stocks. And the way pricing in that market works is the larger the loan size, the cheaper the cost. So, for example, with E-Trade right now, I think if you're borrowing against your stock portfolio and you have less than $10,000, the cost is 9%. And then it goes in tiers all the way up to, if you're borrowing against a portfolio of $1 million plus, your cost could be as low as 6%. And we'll start to have those kind of volume-based tiers over time as well. But for the most part, if you apply for the same loan size, same collateral type, your price is going to be the same today. The other factor in our model right now is just time. So the more time goes by, the cheaper our cost is going to get.
do you guys pull a credit report or anything?
We do not pull a credit report, so there's not a soft pull or a hard pull associated with the process. We are checking a couple of public records, specifically whether or not someone has a history of bankruptcy or a lien from the IRS. And the reason that we do that,
That's a good check.
Yeah, I mean, the reason that we do that is that to stick with the borrowing against a portfolio of stocks analogy, there are some built-in benefits for lenders that securities enjoy that lenders who are lending against crypto assets do not currently have. So we need to be a bit careful, specifically with regard to bankruptcy risk or the IRS having a lien against someone who we're lending to risk. But other than that, we're not worried about the credit profile of our clients. We're just making sure they're not a terrorist or on any sanctions watch lists.
Yeah, you don't need any associations with that.
Question I had, I was thinking of one of the challenges I was thinking you guys probably deal with is how to secure all of the crypto that is being sent to you as collateral for the loans. What is the process like for doing that and safeguarding client assets?
Yeah, so we decided pretty early on that self-custodying crypto and holding private keys was not a business that we wanted to be in at BlockFi. We felt like there were a lot of other companies out there that had invested a lot more money and time and had much more robust systems for making sure that crypto was kept safe, and that wasn't really the value that we wanted to bring to the market. So we custody with a third party right now. It's Gemini. So we have the ability to leverage their cold storage system. We have the ability to create a unique deposit address that maps to each one of our customers. We're really happy that we're able to do it with someone like them versus needing to, have a security guard 24/7 outside our office in Manhattan ourselves.
Yeah, it's funny. We were like very early on stages at one point, just throwing around ideas in our like group chat, just being like, why don't we start a custody service, guys? And then like 15 minutes later, we're like, wait a minute, why would anybody use us over like Coinbase or Gemini, like you said? And we came to the very quick realization that this stuff is developing quickly, and these solutions are coming very quickly. A question I also had that's kind of roughly related to that is, you guys have some big time backers, Galaxy, I believe you've worked with SoFi. What has it been like working with those types of people and talking with them about crypto and blockchain? And has there been kind of a knowledge gap that you've had to bridge, or?
Yeah, absolutely. I mean, in a lot of meetings, less so on the equity capital fundraising side of things, but especially on the lending capital or debt capital fundraising side of things, we do a lot of educating of investors in the same way that someone who's running a crypto fund is educating investors all the time. we're doing the same thing. It's just we have a slightly different target audience of investors who are looking for debt and credit opportunities. And I would say, when we started a year ago, the conversations were pretty split down the middle. And the split was, on one side, you had groups that would kind of lean in and want to understand and see how you could possibly lend against an asset that was so volatile and as crazy as Bitcoin. And there was another half that just kind of wrote you off immediately. And they didn't really want to learn. They took the meeting because, it's their job to explore investment opportunities, but they weren't really looking to understand what was going on. And there's been a lot of progress there. We will probably be announcing soon that, not only were we the first company doing this type of lending to raise institutional money, but we'll also be the first company to receive bank financing to support the company in our activities. So we've done a lot of educating. We've tried to put our platform and the type of lending that we're doing in a box that fits 99% of what these institutional investors typically look at. And the one thing that doesn't fit is that it's crypto-backed lending. And if we can just, if all we do is have them check that one box that they haven't checked before, then we're doing our job effectively.
Yeah, and I bet sometimes it's kind of just relying on people to take a little bit of a leap of faith and participate and find out firsthand that, look, this works, and this is not something that's going away, not an industry that's a fad. But has it been more difficult to have these conversations during the bear market?
Not really, because the numbers in the data are still kind of on our side. So despite the bear market, Bitcoin still has a market cap over $100 billion by itself. And there's some other really interesting stats that a lot of these investors that we're talking to don't normally think about. For example, the market cap for gold or the market cap for US dollar denominated debt that is held outside the US. So bonds or other types of debt from central banks or governments or international corporations that aren't operating in the US market. And gold is 7 trillion and US dollar denominated debt outside the US is 11 trillion. And if those are the addressable markets for Bitcoin, and if the 11 trillion is part of the addressable market for what BlockFi is doing in terms of lending fiat against Bitcoin, but making that available to retail investors who it's never been available to, then you have people's attention. And you've also asked them a question and presented a stat to them that they're not familiar with, which institutional investors really like, because they do want to understand what's going on, especially when the numbers are in the trillions or even above 100 billion for Bitcoin's market cap. They're like, okay, yeah, that's still pretty big.
I was just going to say, I'm sure the hardest part of that was probably getting the first big partner. And then once you can go to new companies and say, look, we're already working with this person or this person has invested with us, then I'm sure that goes a long way towards easing that conversation and putting them at ease and, feeling comfortable with the whole thing.
Yeah, absolutely. I mean, being able to say now, just versus January of this year that we've raised $50 million in a traditional type of debt funding facility from an institutional investor. We've been lending this entire year throughout the bear market. We haven't experienced any losses or defaults. Those two stats alone completely changed the conversation versus where we were, at the beginning of the year.
Yeah, for sure. That's, maybe a little surprising to me that you haven't had any defaults or anything, but that's good. It shows to me that people aren't getting into something that, with you guys that maybe is a little over their head. So, last topic I want to talk about is the mortgage side, the lending. On here it says purchase real estate with loan proceeds. So basically that would just be treated as a cash transaction if I want to buy a home then, correct? So I know like now if I take out a mortgage and when I do my taxes, I get credit. I don't know if it's a credit or how it is with the interest paid. So would someone, if they're using that crypto purchase as a mortgage, do they not get to claim that on their taxes? And maybe this is something that's not even established yet. I'm just thinking for myself more so than anyone.
It's a great question. And without giving tax advice or encouraging people to solely rely on our position.
This is not tax advice. This is
most of the time, interest charged on a loan from BlockFi will qualify for the same type of deduction that you're referring to, which is the mortgage interest deduction. When you're claiming that deduction on a BlockFi loan, it will probably be classified as a investment interest expense deduction because these aren't structurally mortgages. But you should have the exact same effect in terms of your after-tax cost being lower than your pre-tax and kind of fully loaded interest cost because you do benefit from a deductibility of the interest.
Well, that's great. I'm sorry for throwing so much stuff at you. I just, I got everything asked that I do. Killer, how about you?
No, this is one of those ideas where I looked at it and I was like, why didn't I think of this? I think it's a really good idea. So
yeah, it's great.
Yeah, I think it's a real cool thing.
Yeah, one more thing I would bring up. I get the sense we're about to wrap up, but I think it's important for people like us in the U.S. that have access to low-cost mortgages and other types of low-cost credit to remember that there are lots of places in the world where, for whatever reason, it's an emerging market or they have poor monetary policy, that credit availability is dramatically worse and more expensive than it is in the U.S. And I think that if we're successful and we're charging not only you two the same rate if you apply for a loan on the same day, but also someone in name your country, Argentina is top of mind for me given some of the volatility they've experienced in their market recently. At the same low cost interest rate that we're lending to people here in the US. And the reason we're able to do that is because it's backed by Bitcoin. That is incredibly valuable. It's game changing from a global credit perspective. It's game changing from a what's the utility value of Bitcoin perspective. And it's kind of what we get excited about in terms of thinking about what we could accomplish over the next couple of years.
Yeah, for sure. And I really like BlockFi and what you guys have going on because if you're bullish long term on cryptocurrency and you don't want to sell your holdings, but you need cash for whatever the case may be, this is the perfect solution in my opinion. Maybe not perfect, but it's because there's maybe nothing that's perfect, but it's really great. And kudos to you guys, Zach. Looking through your team, it looks pretty stacked. Your advisors are pretty impressive. So I like what you guys have going on. If you are in need of a loan, head on over BlockFi.com. That's block as it sounds, and then fi.com. And you have that chat there, and Abby's face pops up, and you can ask questions if it's during business hours with her or whoever the customer service response is. So seriously, check them out, Zach. Kudos to what you're doing. Let us know if we can help anything with you, and keep up the good work.
Thanks for having me, guys. Likewise.
Yeah. So thanks everyone for listening. Like I said, check them out. Stay safe out there. Tip that waitress of yours, and we'll peace out. Talk to you guys later.